we'll be doing our roundup and analysis and preparing for the week to come, discussing the major things that have happened from a technical analysis viewpoint on the charts this week. Welcome to the show, everybody. I'm Rocky Outcrop, your friendly local not financial advisor. Not financial advice. As I'm a trader and I like to share my knowledge with people. And this week, what we're going to be doing is taking a look at a relationship, as we did a few weeks ago, a relationship between a couple of different charts, using a third chart to kind of triangulate what's happening with a couple of other charts in the world of cryptocurrency to give us some prep going into Monday, looking at traditional markets to have an idea about whether or not there is a risk on or risk off sentiment. That's kind of the goal of today's show. Drop in your comments in the box below the video, and hitting like and sharing it with your friends really does help the channel, and I really do appreciate that. Thanks for everybody who does do that. Okay, so welcome to this. This is the SPX chart. And as you can see, there's this shaded background there's a box in the background there. And I'm looking at this and thinking, seems markets are closing up more or less where they closed up yesterday. But of course, the story of the S&P 500 into the close for today has been a green day, having gapped down hard at the open, and then the prices rising back up to more or less finish then where they finished off yesterday. A good day, but it's one of those sort of one step backwards, one step forwards sort of a day, meaning that the week has been a relatively negative week. However, the overall shape of this is something that I feel that we've kind of seen before. And I just wanted to use this 15-minute chart here to kind of look back over to the back over here to the end of last week, and where we saw prices ending up. On the Thursday, the 6th of November last week, we saw prices dropping down towards the 6,720 area, a gap forming then in fact, and Friday opening up, testing down to the lows of 6,630 and pushing back up to finish last Friday around 6,730, with the gap that had been created being filled in. It left a gap on the charts, okay, and then coming back over to this week, we can see that it was not that dissimilar a story, with the lows being tested at 6,645 and the close today coming in somewhere around about that 6,740 level, if things were to stay the same price as they are right now. Very similar kind of numbers. In the meantime, what we have seen, of course, was highs up here at 6,800, and it's a bit of volatility that's been happening really when we kind of cast our eye back here at the whole time that markets have been up in these highs. So another piece of context as well to kind of look back at what's been happening this last week is that this is coming back down to test lows and test the center point of the overall range of the highs. Kind of just draw a big kind of box around here. This overall range up here has seen prices come back down, up and down towards the middle of that, and it's a little bit of that indecision. And while it might not show up quite as a doji properly here, we can see that over the last few weeks here, there actually has been this type of indecision happening at the top of the charts. And if we can see these shaded boxes that I've been using, you can see that the lower shaded box is about midpoint of that candle there, and the higher shaded box is midpoint of the subsequent candle, those two green candles, as prices were testing in a similar sort of pattern to what they're testing in here recently. So what we had back then, this is kind of September through October, was a rise up that had a big push down, kind of got markets a bit edge of their seats and nervous. Prices pushed up and down and kept testing in and around about those middle areas. So the story from here was one where the middle range was where the prices ended up towards the end of the week, and then they chose where they were going to go next and did that for the next week up into the next area, as we've then wrapped around and coiled back in again and closing towards the midpoint of those candles. So the background story this week also includes the US government shutdown sort of ending, but then due to kind of go back to the debating table, if you like, in January, because the government shut down only February, because it only takes you through to the end of January. So it's kind of like on the one hand, news that was expected, because it's the longest government shutdown in history that just happened. So the expectations were growing that it would end, as things do when they're at record long lengths. So everybody expected it, but then when it came in, it wasn't exactly good news, and it certainly wasn't a surprise. And as such, markets have kind of already priced in that, you could say, but the result of it is this hesitancy and indecision on the chart. So will prices push higher? If there's any moments of hesitancy and indecision, you're going to see momentum will have been stalling, and we can see that the RSI has been coiling around, and currently it's just below the midpoint. So the negativity from the last week and the lack of positivity running into this one, into the one coming up now, depending on when you're watching this video. Thanks to everybody joining me live on Friday as I make this. You could be watching this at the start of next week, wanting to get the lowdown on where things could be going. Well, it's kind of like, what's the attitude towards risk in the next week? And we will be paying, and you'll need to pay close attention to things like the major news stories, because they've had such a big impact on the market. But also, as we see that the date today is the 14th of November, one of the things that's coming up is a big event. If we look at the biggest corporation in the US stock market, more or less anyway, the story here is really singing to Nvidia's hymn sheet. We've got various news coming up on this stock all the time, and you can see actually with these gaps and movement up and back down to fill in the gaps and test again, this dominates the indexes. So this could, if you could boil the charts down to one singular point where this is the thing that's waving everything else, it's controlling everything else, this is the rudder that steers everything, could be pointed right to this chart. And it's towards the middle of that coil, of that range. And what is its current context then? Why is it like this? What's it being priced in, and so on? And when we see that they've got earnings that are coming out on Wednesday, the 19th of November, so that's the big event of the coming week, we know that the market is putting in that kind of indecision in the advanced looking at this event that's coming up on Wednesday, which could go a few different ways. One of which could be that they continue to surprise and delight all the market as they grow and grow and continue to expand their revenue. If we look at certain metrics that we've seen, like the cost for OpenAI of the Microsoft Azure hosting, which is actually making it quite difficult for OpenAI to really grow their profits, because they've got a profit share agreement with Microsoft of 20%. So as their revenue scales, they keep giving over more and more money. But at the back end, they're using Microsoft Azure servers and having to pay for them too. So as that need grows, then they're also paying more and more to Microsoft. It becomes like Microsoft is sucking all the value away from OpenAI, and the more money they make, even higher they require their profit share to be in order to offset all the money flooding out to. Anyway, the point being that we've seen this massive rise up, and people use that as part of the story to say that AI is in this bubble and it's not going anywhere. Look at the costs that are racking up for OpenAI. They're at the point where they're spending about $4 billion a month on server costs with Microsoft. It's just the numbers are so mind-boggling. But then it's going up because people are using the service. I was using it the other day. Just wanted to see what its chat was, and it was really slow at bringing me back messages. I was thinking, this is not as fast even as it once was. So they've got all that extra capacity. It's a growth story, and as part of a growth story, you're going to see these big moments of trepidation. Can it continue? Can it not continue? And the next thing you know, you're moving on to another level. So I'm not bearish about these results coming up, despite the fact that there's been a bunch of headwinds for Nvidia with regards to tariffs and all that sort of stuff. See, for instance, the UAE, right? And if you know the UAE, it's the United Arab Emirates. It's one of the richest places in the world. Dubai is there, where they have got these palm islands that man has made them, gone out into the sea and just created land out of nothing, on top of which they built the 6-star and 7-star, 6 out of 5-star hotels. It's that good. It gets 6 out of 5-star, and it's one of the wealthiest places in the world. And they just got their first Nvidia chip, and UAE just got their first Nvidia chip this quarter. Their first one. The growth story seems to still be there. I'm not leaning one way or another. If we look at a pattern of events, though, with Nvidia, they've done a good job of saying to people, we will do well. The analysts have come on and estimated how well they've done, and they've done just ever so slightly better, and they just keep managing to just do that. It's just a little bit better, here and there, and that is enough to keep everybody happy. Now, it doesn't mean that stock doesn't go up and down, and in fact, in the wake of good earnings in the past, we've often seen this go up and down. So it's really, for me, it's like I say, I'm not anticipating one thing or the other properly. What I am anticipating doing with this is looking at the detail to try and understand what this is really saying and how the market's reacting to that. Because what we've seen in the past with other earnings calls where it's dipped, which one would it have been to look at? In the last few quarters, anyway, we've seen cases where they said things like some of their services that they do haven't grown as well as some of the others have, and then the markets looked at that and reacted to, oh no, that's where so much of their profit comes from. If that's not growing anymore, then the story's over. And in the night of the earnings, stock prices dumped like a few percent, up to like 10%, and then recovered and closed green the next day. So I'm going to be looking at the detail and looking at how the markets react, but that's coming up. So if we can accept then that that Nvidia is kind of the hand that's on the rudder of the markets just now, and that is affecting things, so that if you look at SPX, for example, the chart almost mirrors one single stock's chart. And if that single stock has got earnings coming next week and it's in the middle of its range at highs, and the whole market is anticipating good earnings overall, like good in the sense that, I mean, if we just take a look here at what people think is happening, if you see their earnings here, the revenue, let's look at revenue, 46 billion was reported. They anticipated 46 billion last quarter. This quarter, how much do you think they anticipate? 47 billion, 48 billion? Oh, look at that, 54 billion. So the world is anticipating this company increasing its revenue by nearly 9 billion, by 20% in the space of one quarter. So the earnings are going to be like good, in the sense that here's a company that's making a lot of money, guys, a lot of money. But then, of course, you look at things like, well, what was the prices last time and what are the prices this time? And you see the prices just roughly drawn in are up 25% at those highs. If we measure from the midpoint to the midpoint, then where are we? Go from midpoint to midpoint, and we see that the prices are up about 8-9%. So I'm kind of leaning towards the idea that sort of, if this price was correct, then would the next correct price be for this potentially at least testing and retesting those highs before deciding what's doing next? Even if it was a bear trap, would it go up and test those? And be leaning slightly that direction. And I can see, of course, as we come into these sorts of periods with movements back to the mean, that as the moving average has been reacting here, it comes back down, and it's very often we see a sort of pattern like that on this chart with the moving averages. Here's the 4-hour chart, and you can see spending a lot of time going above and below the 50 simple moving average, coming back towards the 20 or 200 from time to time. But this has had some volatility in it. Now the issue with the volatility, though, is real, because volatility is not the friend of uptrends. The end of volatility and the end of fatigue, the fatigue of volatility is beneficial for bull markets. It's beneficial for trending markets. volatility will go up at times, and we've discussed this with regards to various charts in the past, like Bitcoin and so on. Like the volatility at 100,000 was an awful lot higher than the volatility when it was priced at 10,000, because it could do its entire value in a day, and that only be 10% and so on. And there's a kind of perspective gestalt aspect of volatility. But if we just take volatility to kind of mean that prices were putting in kind of small candles and then they put in much bigger candles and went kind of maybe a bit sideways, that type of volatility, that typically is not the friend of trend in markets. And you can get examples of that really on any chart. But if we look at this major rise up in Nvidia here, the candles were relatively small. Looking at the drop down that happened here, you had bigger candles coming at the end of that. The volatility wasn't really a friend to that trend. And then the lack of volatility allowed markets to kind of float along to where they wanted to go. You might not kind of accept that that's the thing. Let's just bring up a NASDAQ. That's NDQ, NASDAQ 100 index, just kind of zoom on in here and see downward trend, not massive candles, and then whoa, big candles, changed. It wasn't very good for that trend, that volatility. Do the analysis again, small candles, small candles, small candles. Now we've got bigger candles. That's not good for our trend, right? So to speak, that's how you could look at that. Here, smaller candles, bigger candles wasn't great for the trend that you had at the time. So that's a little bit of an issue in overall, since we can't really easily point to things like the SPX here and say that this price action down the way has really been a downward trend. So the increase in volatility here is not exactly the antithesis of a downward trend. So if the trend is up, then what's the antithesis of? And that's the issue. And that issue there, which is coming in with volatility and everything, is creating a situation where the markets require things to base out. So if there's volatility happening up and down, and we've got the markets here going in a range, the longer that you spend at 50% of that range, kind of the better, and base out overall to let people know that things are all right. By doing which you'd bookend the volatility, which would then shrink it down. And then over time that would become lower, which would then become more conducive to an upward trend or a downward trend indeed, but the trend happening as opposed to this spread of prices without directionality. And that's the case, and since that's the story that's happening right now in the markets, and what we've established so far is, one is that there is a story, there is a trend. It can be tied back to one company, and that company is hesitating right now. We're looking towards Wednesday, trying to get a bit of clarity on Wednesday and the reaction on Thursday and so on, to get clarity on what could be kind of coming in markets and how people feel about things. Is there the money to back up the frothiness in price? And will they be able to reach that outlandish 20% increase of 9 billion from 45 billion to 54 billion in earnings? I mean, can they do that? That's insane. Can they do it? It's amazing. And if they can do it, then a sort of feeling of like, yeah, our amazing American economy is going to go from strength to strength. In the last week, we've also had other things happen. The FTSE 100 hit an all-time high in the last week. So could you then say that markets all around the world are frothy and this is an issue? Or could you say that there is a bit of breadth happening in the world? Maybe. In the UK, the reason why the FTSE 100 went into all-time highs is because of companies primarily interested in global activities. That's right. So it wasn't actually a health case story for the UK economy. It's more like we own Hong Kong Shanghai Banking Corporation and AstraZeneca, and they are doing really well in the world. So there's a bit of a confused picture out there because there's a lack of breadth internally within economies. So can we see some of that happen? Does the confidence of Nvidia not dropping give the rest of the market the air oxygen to get up and catch up? That's the question, and it's important because markets are linked right now. Going into the weekend, we're going to be taking a look at crypto to get an idea of traditional markets and what could be risk on and risk off. And the reason why we're going to do that is going to become very apparent to you right now. This is the SPX chart. Futures for this are ES. ES here has a look like this. It's not that dissimilar to the NQ, the NASDAQ futures, that have a look like this. And if all of these things all have a look that is like this one corporation, then we can say, and it does, by the way, slightly different zoom, futures last over longer period of time, less candles on this chart, but it's the same. So if we can see that in futures, and futures takes us, that extends the time frame out for us a bit more, and we can also see that these futures line up with crypto so often. And if you actually want to have more detail on this, you can watch my video from last week. You might have to become a member of my channel to see it. But you should watch that, because I explain in detail during that video exactly how you can see that that NASDAQ and Bitcoin track each other so well. Now, if we were to want to see this again briefly, because we kind of have to be able to put this into context, then you'll notice that there's a few things happening at once here. Bitcoin has been drawn towards liquidity in big round number targets like 100 grand, meant it kind of pushed a bit further or a bit less at certain times. At times whenever it's able to like go above 100 grand though, it sends a fairly kind of clear signal about risk on appetite. And at times when it's below 100 grand, right now anyway, it sends a fairly clear signal, kind of the headline, but people can look at it and say, what's the price of Bitcoin? It's just the lack of that extra digit on the price, it being 5 figures instead of 6, is enough to instantly see that there's a different attitude to there was a couple of weeks ago. So this is kind of a big kind of a canary in the coal mine, interesting one, especially for people who are looking at markets in the weekend, trying to figure out what they'll be doing trading next week. And the futures market, of course, will close tonight for you. For tonight, I say tonight, for me, it's this evening for you guys, in America, when the market closes, because there's time difference between us. But this evening, when the futures markets close, you'll not get that kind of information over the weekend until they open back up on Sunday night. So, and it will, by that point, it'll be Sunday night for you guys. Then they open back up, and will they then give us an indication of where the traditional markets go? Absolutely, just like they did tonight, last night, and so on, throughout the week, in fact, showing us throughout the night when that gap was forming on SPX from one day to the next. That was happening because in the evening you could see the prices dropping on the futures. When they opened back up, they were together and moved back up together, but you could see what was coming in advance looking at the futures in real time. So can we get some of that from crypto? I think we can. And when we consider then the way that these have been very correlated, what I'm looking for is a departure in the correlation. And that's actually begun so far, but it's begun in a negative way. Why do I say that? Well, because it's actually putting in prices right now on Bitcoin of 94,000 beside us. It's happening live. And if I go over to NASDAQ and see here, well, the lows established earlier on, around about the time that markets opened, were then rejected and pushed up in the traditional market. So here's something that has been really tightly correlated into certain periods over the last week, seeing more decoupling between these assets, Bitcoin and NASDAQ, in the interim period when the 1 hour closed like each night of these futures. And in that period you see a slight indication, then the traditional markets opened back up and followed the crypto risk on or risk off appetite after that 1 hour. And it's been kind of consistently showing us that there is this appetite and this correlation, to the extent that you'll see individual 15-minute candles lining up with like bullish here, bullish there, bearish there, magnitude more or less lining up, structurally lining up. Now the overall points it reaches to are different because they got their own individual targets, but structurally it lines up. And here we see a departure because NASDAQ is pushed up. So what does it read like going into next week is that we're starting to see the first bit of decoupling into the end of the day. And is this a false signal? Is this a false signal for the markets? Is the traditional market ending up strong on the day actually telling us that Bitcoin should be strong on the day or not? It might be. There might be dissonance between those two. Or is this one telling us that the traditional markets ended up strongly when they should have been lower as well? That's the main thing. And over the next few days, seeing how crypto does, I think is a pretty good indication of how the markets will do. So what then would you be looking for? Well, at the very least, if you wanted to see SPX and NASDAQ and so on open up more or less where they left off the week, if Monday could open up similarly to where Friday left off, Friday leaving off very similar to where Thursday left off, you'd have two things happening at once. You'd have 3 days where the markets were more or less the same area, which contracts that volatility in terms of exceeding the range. While the volatility within the range may still be high, it contracts that down further. And then what that means is that things like your stochastics, your RSI, all that stuff cools down, the momentum factors cool down, it starts to form a base. And it's actually not negative for stocks to do that. And it could then be give you a foundation to push up from, establish some keen support and resistance areas. So there's a benefit to being around there. So when I give you kind of the zero case being, let's see if SPX could open up where it closed off, there is actually a really underlying positive message there. But base case, what would need to happen here? Well, this would need to go up, right? This would need to kind of go up to see that happening. If it's going to do so, this is actually a fairly decent point for it to do so, just in terms of, low, high, low, high, low, high. But that only gets you so far. It might only take you up to something like 96 grand again before it tries lower, as part of this trend is kind of showing us that it is doing a fair amount of that. So, that kind of push up, that kind of push up, or that kind of push up. If we were to go on down again, or maybe if it pushed up to here, we'd only get that far. At any point, maybe only pushes up that far. One of the first things we want to see then is any retrace on this going further than this measuring stick. And the easiest kind of analog to that would be to simply look at it horizontally and say, well, if at any time it took out one of these prior highs, it would have had to have gone further to get there, because that's a longer road. If we know it's gone round this corner, then it's driven that far to get there. We don't need to measure the length of the road to see it. So we can see very easily. So that means that we could got some very, very clear areas to push above. 97,000, big deal, but it kind of comes into an area of larger liquidity. We've got these two different size boxes here to give you a quick visual of that idea. This larger liquidity, and that's the pre-$100,000 area. But this box, is it fair to have it sitting there and not as high as $100,000? No, so I've left it till I was live on the show to extend this up as part of my kind of Rocky Outcrop animated chart series, and show you that what we wanted to actually see happen here is for this box to really be taken out completely to the top side and moving up above $100,000. What we have seen is that the volatility channels and so on, the diagonal lines in the background that do indeed continue to function very well. However, I'm going to have to line them up again properly because they're not lined up. Just a sec. So yeah, these are working very, very well, as you can see, and they continue to. Great, fantastic. Where are we now? We're testing the lows of one. So if the markets were not to pick up kind of right now, you could see them dropping down to test 92,000. That does suck for it structurally, because what happens here is that it takes out this whole area, right? This whole area will be taken out, and the next sort of major areas to test down to are 75,000 and so on. 75,000. Okay, so that would be a huge drop off, and when things would get very scary in the markets for people if they came down there. What would that mean though? Because I am tying this story, there is a singular thread. If we were to see that happen by Monday, then looking at NASDAQ and I'm looking at SPX, and I'm thinking, oh gosh, these things are going to possibly have a risk-off appetite. I'm not anticipating that happening this weekend. That's definitely not what I'm talking about. What I am actually talking about is retraces back up to the mean, at least, probably, and we'll see how we get on from there. However, this is a story which is worth mentioning now, because you should be a subscriber to my channel, come back and so on, and then you have these really in-depth pieces, which can be summed up very quickly because I've already laid that out. So if you do watch again in a week or two and I'm talking about this potentially happening, you'll already be prepped and understand it. But what I'm actually looking for, like I said, retraces towards like means and so on. And here's a couple of means that we have. The 1 hour time frame, the 200 simple, sitting up there around about 100 grand. That would be a lovely retrace up to, as you can see, structurally wouldn't change a thing really, because until you're through the purple boxes there, once you've made it out of Mintopia, you've got a chance of changing things structurally. This here would be not much of a change, but it would give at least ES and NQ and so on the chance of existing with green candles and so on during the week. So that's it. That's the situation. There's a couple of things from the title of this video, which I think is I just put in a T at the end there of that one, muscle memory. XAU USD. Here's a couple of things from the headline. The video here. It's going to look at gold, and gold's kind of the risk. The gold as a safe haven. It's not looking so great right now. The massive drop downs that it's had there, that's not looking so great. Are we seeing that cash is king, or are people moving out of gold and thinking about buying Nvidia shares? Is Nvidia going to get 9 billion more profit? We're going to find that out on Wednesday. How's that looking? What's it think? If it can survive the headwinds that like America's blowing on itself, then Nvidia looks like the type of company that can survive anything. So we'll see how that goes in the week here. But you can see, this is the bigger picture as I expand out. Double top up here. It could have been a tweezer, it could have been a chimney, it could have been any sort of name you want to give that. And it has, of course, tanked down, resurged back up towards 4,200. Great, 4,242. Really trying to get 420 in there, but failing, and came back down again afterwards. It's not super bullish right now. This could easily be the end of that major trend, which would generally speaking typically hint at things being positive towards equities. But we're in a world where things are all being pulled by one little string, and the greater the disbelief that string could keep on working, the higher the gold price went. So the fact that gold price has dropped down, but it hasn't been associated with a crash in Nvidia yet, makes me think that it's hard to believe that cash is king and that scenario happened. What else relates to that? And you've got the gold, the oil, black gold oil over here. And we spoke about this last week on the channel. There was been a great move down here. We were saying this would be the case. It's back towards the middle of that range again. That's cool. This trend, while it's consolidating, is down in there. And it needs to break its previous high structures and go back above $60 and so on. So much pressure in the world to stop that from happening that it puts a bit of a headwind on other things, which puts a bit of a tailwind on gold. Funnily enough, is it that the world is coming to accept that the taps are wide open in the US and Saudi, and we're flooding the world with oil right now? We don't mind. We're going to stop Russia. We're going to sanction anyone who buys Russian oil. We're going to not insure them above a certain price. We're really going to put a chokehold on oil, and we don't care. We're just going to take the cash. Is that what's happening? The world coming to accept it? Or is this thing itself maybe thinking about starting to bottom out? And is that what's bringing down the price of gold? Because what we have is a few jarring things right now in the economy, with a single clear straight thread that goes all the way down to crypto and all the way back up again to Nvidia. And that is the story of today's show. Should be very helpful to people who are trading in the coming week. I'm super excited about what we have to look forward to in the coming week. And it's time to kind of look on over to the audience and see what you guys are saying and how you're planning for the coming week as well. What do you think about any of the stuff that I've said in today's show so far? Got a couple of great comments in here today. One from Disco Biscuits. Happy Friday. First round is on me. Cheers, pal. I'll hit the like on that. And Lisa, thanks for a great Friday wrap up, Rocky. You're welcome, Lisa, and thanks so much for the $10. You both get hearts on those from me. Brilliant. So what else do you think? Are you nervous about what's coming in the near future? If you're looking at charts and you're thinking that there's this dynamic right now, lucky, in a sense, by the way, to have made it back up into the middle of that range. Nice bounce up on SPX, nice bounce up on ES and NQ1. Not a nice bounce up on Bitcoin. That's the first kind of substantive period. It's the first 8 hours whilst markets have been open that it hasn't operated in lockstep for the last ages. And that was today, but it was to the downside, which is very worrying, it has to be said. So, but is it the difference that needs to be seen? Is it starting, and does the weekend kind of relief come into play? And if Bitcoin's above $102,000, does it seem like back to business as usual come the start of next week? And how will we see those NVIDIA earnings play out? Is it going to have as big an impact in the market as I'm saying it will have? I mean, mathematically, it's not a debate. That's very clear and well known that it would have a big impact. But are we going to see something else kind of step into that gap and help push the markets up? One of the things we've seen this week is the healthcare stocks in the US have been rallying, as of course the SPX has been dropping. So if there's been strength in healthcare in the US, it's that signs of breadth coming into the markets, more things moving up into this head space that inflation and the lack of, the value of the dollar dropping has created. SPX, should it be at 6,700? Is that crazy? It would be if you'd said it to somebody 10 years ago. But what would they have believed more? That SPX would be at 6,700, or that the US debt would be at $38 billion, that they'd be borrowing another $38 trillion. They'd be borrowing another $1.8 trillion, and they'd have just shut down the government for the longest period in time, only to kick the can on it until January the 30th on approving that borrowing of that $1.8 trillion. So it wasn't the Republicans doing it, it was the Democrats. And, what would they have believed anyway? So then, is $6,700 too high on SPX? Well, if you've got $38 trillion in debt, maybe not. Inflation is a real thing. It's really real. I mean, is $4,242 too much to be paying for an ounce of gold? Yeah. And these are the major questions. That's what we're doing on today's show. That's what we're analysing, kind of getting everybody prepped, thinking about the week to come. Are there opportunities there? Are there some stocks that are underpriced that could benefit from various things coming up around the corner? And there are others as well which are suffering from a lack of certainty. So right now, in the run into earnings for NVIDIA, lack of certainty in the sense that it's darkest before the dawn. We're about to get some. We're the furthest away from the last time they gave us any, so we're about to get some. That's one thing, but another thing that's lack of certainty is the Fed, right? The Fed saying, as far back as September actually, Jerome Powell, before the government shut down, was saying that the next one, the October meeting, was going to be one of the kind of more straightforward ones. They actually had a good consensus among them, but it was wild how much it changed for the December meeting, and they were anticipating back then that it would be the biggest spread that you could have imaginable, the biggest range of opinions that you could have, that lack of consensus, lack of agreement amongst everybody would be the biggest. And he was saying it's an unusual situation. At the same time, he's saying they're looking ahead at different bits of information, using kind of more forward-looking information than they normally would look to try and make a determination on what interest rates should be. Then the government shuts down for the longest period it ever has, not even getting the information that they need to be able to make a decision. And we come out the other side of that, ask a bunch of people what they think in the Fed if there's going to be a rate cut, and some people say a half point, like one person says a half point. More people have said that they're not going to, and looking at the markets to see what they expected, you could derive that there was a 67% expectation last week of a rate cut, which has dropped to 47%. It's less than 50, which is obviously bad for a bunch of reasons. Why? Well, I mean, because they're basing it on inflation is the chat, right? So if there's high inflation, but everybody else feels like it needs to happen because, there's there's just so much friction and cost in the economy, and there's not enough growth, and people are saying, well, we need worse job figures in order to actually want to cut the rates, and it's just really difficult out there. In terms of certainty, it is the least certain that people have been for a long time. So one of the parts of the story, of course, is looking to see if we can get any resolution on any of those figures and any of those feelings and plans over the next week as well. That may be something that you're looking out for yourself in markets. Do let me know if you are or not. Here's a news story here. This is actually on that topic. US equities rise as dip buyers shrug off fading Fed rate cut hopes. November 14th. So, it's talking about the rise. Nice one. US equities rise as dip buyers. But of course, what we saw was, as I explained at the top of the show, that they went down to close, gapped down lower, and then came up to close at where they closed at yesterday. So the rise that happened today was just parity between the day and yesterday. So Sinead Karu and Dara Rasinghi over here were talking about Wall Street shaking off earlier losses, outperforming Asia and Europe on Friday as equity investors hunted for bargains, even as US Treasury yields rose after hawkish Federal Reserve officials trounced on hopes for a December interest rate cut. While safe haven gold prices fell, the dollar index edged up after blue chip bourses from Tokyo to Paris had closed lower, and in London, fresh concern about Britain's upcoming budget had added to the pain across UK markets. In fact, fresh concern about the budget for the UK is one of the incentivising reasons for having a rate cut in the UK. Less looking at inflation and more looking at there's problems in the economy. We might need to cut rates, from the more kind of, we need to ease the economy. Let's not look too closely at inflation. We're going to have to do this anyhow. Slight inflation worries and signs of relative stability in labour market after 2 US rate cuts this year. That's the comment that I made there about how we need to see more people losing their jobs in order for them to want to cut the rates. A growing number of Fed policymakers have signalled reticence on further evening. On Friday, Kansas City Federal Reserve President Jeff Ray Schmid added to the chorus, noting that his concerns about too hot inflation go well beyond the narrow effects of tariffs alone, suggesting that he could dissent at the Fed's December meeting if policymakers opt to cut rates again. After 43 days of assessing Fed policy without official data due to record-long US government shutdown, traders took heed of central bankers' comments and were pricing in a 46% chance of a quarter-point December Fed cut, down from 66.9 probability. Those are the figures that I was going. This article is almost as if this person was writing this article as I was making that episode, isn't it? Nice to have a bit of a summary about what we were talking about here. I've delved into that a lot better, though, and shown the relationship between different markets and where things currently stand, and explained each one as we were going as well. Explained the Nvidia chart, and explained the gold chart, and so on as we're looking at them, and tied the things together. So this is what to be looking for next week, right? It's good information. So they were betting on a week ago at 67%. So things can change quickly in the world of rate cut probabilities, and it's not until December. One factor that I feel quite kind of encouraging about there being a rate cut, although I hesitate to say it, is that interest rate cut expectations themselves are inflationary. So the last thing the Fed wants to do is to signal that there'll be a rate cut, get skewed data, see higher inflation, not do the rate cut, then find out in the next meeting that they needed to do the rate cut, but they didn't do it because they told everybody they were going to do it, and then there was some inflation, and then things got worse. So they have to really choose their words and their strategy and everything. And so it's not a surprise to see a lack of clarity coming into a really important rate cut, because it's better to have a lack of clarity on it, because you'll get better fidelity on the raw data, right? Because people, if they feel there's going to be a cut, then they're going to buy the extra popcorn at the cinema when they go out with their family because they think, yeah, next week I'll be able to afford the mortgage a little bit better than I can today. I'll get the popcorn. Ooh, inflation. So this is a thing, right? So anyway, still after opening lower, the Nasdaq and S&P 500 clawed their way back to gains as they set aside recent jitters and frothy valuations in speculative and heavyweight technology stocks. The rest of the world was weak because they were following the lead of the US market on Thursday, said Andrew Simon. The rest of the world was like, oh no, the market's plunging. Well, let's be correct about this. US equities, the futures on Nasdaq and ES, S&P 500, were dropping into close. Into open. We're dropping into open. So it wasn't until 2 p.m. having the UK markets been open for 4 hours already, 6 hours already, that that we found out that maybe the US wasn't going to shit the bed. So actually, anyway, they were following on not from Thursday's data, but from current live data. It was happening. It was equilibrium around the world as that was happening. Senior portfolio managers at Morgan Stanley Investment Management said that he noticed that Wall Street trading was driven by a bid in the stocks that have led the decline in the last few days. People are conditioned to buy the dip. It's been a great strategy, and you're at a time in the year when the winners keep winning. This is why the stocks that are working today have been the winners since the low in April. Along with the Magnificent Seven stocks, AI chip leader Nvidia rose more than 2%. S&P 600 Technology Index SPX MCT shook off earlier losses to add more than 1%. On Friday, investors are looking forward to quarterly earnings from Nvidia, and a host of retailers in the week ahead could shed light on the state of the consumer and AI market. As of 2:44 p.m. Eastern Time on Wall Street, the Dow Jones Industrial Average was certain numbers. There are the numbers there, that's what it was. But what we can also see is that the safe haven Swiss franc gave up earlier gains, while Britain's sterling also weakened. There's this day today on a Friday coming into close, which necessitated looking back at the week and kind of clear-eyed, seeing it for what it was, the indecision that exists there, why it exists there as relates to the Fed, as relates to the dissonance between the safe haven assets dropping, the Swiss franc as mentioned there, as gold as we explored on the show, oil showing of course a confusing signal as the world pressures the prices down, and oil is being hemorrhaged out of Russia towards the kind of dodgy states of North Korea and the like on really bargain basement prices, competing at Tehran levels. Tehran actually probably getting more money for its oil than Russia is even right now, because Russia's got the limitation of fixed high scale, which Iran doesn't have. So it's a world which has got confusing signals, and it's got to clear all that out, look towards it, understand where crypto might give us insights into the coming week over the weekend, and to think, maybe things could be okay as long as Nvidia manages to increase its profits in the space of just 3 months by $9 billion. That's right. If you woke up tomorrow and you were the CEO of a business, and they looked at your monthly target, and it was, I need to make $3 billion more profit this month. Last month I made profit, I need to make $3 billion more this month, and every month this quarter, just to achieve what people think that we'll achieve at a base level. If I do worse than that, then I'm bad at running this company. Then maybe running the world's most profitable company isn't a job for you. But that's the sort of thing that he does there every day, that he does the job. And that's the story in the markets. That's the chat from the audience. I've missed a couple of messages that came in from people here I think are worth reading out. Jay Hunter said, what a pleasant surprise to get a Rocky Outcrop live stream today. Thank you, Jay Hunter. That's appreciated. In 1,000 years of darkness, sending me a cup of coffee. You couldn't ask for much more on a wonderful Friday like this. Markets indecisive, having hesitancy, and the audience not having any hesitancy. No, dive right in. And if you are watching this later, remember, hit that like button, leave me a comment down below. Here's a couple of things to just leave off the show with so that you can see the state of markets. Here's the Google chart. It's obviously one of the Magnificent Seven. It's a big one. This was an interesting one today, in particular for people who are aware of the fact that these things have a major influence on the overall indices, the indexes, as this formation at the top was put in, and today's price action managed to come back up and test it, but didn't actually manage to break above it. That's not great, is it? It's not great. It's not great. The dip buyer's not buying enough dip. Get more dip, you buyer. Let's see. Oh, that's the button to push. So that was one to take a look out for. Apple, on the other hand, did do what you would have wanted it to, finishing up the day at the midpoint of that upper range on price. Going to just draw something around this so that it becomes a little bit more visually obvious to people who are not used to looking at charts. You can see here that shows you that Apple managed to do the job. But at the same time, this, of course, is a pattern that could lead to various things happening. It's not the first time I've been in a situation like this. Just kind of quickly kind of show you things on charts. You've got stuff like that. It's patterns on charts. You've got stuff like that, which was another pattern on a chart. You get chart patterns all over the place. If you want to learn about chart patterns, I actually have a course that you can get by going to www.technicalanalysis.school. I highly recommend you do that. Here's another one of the Magnificent Seven. Tesla obviously tends to have a bit of an uglier chart at times than some others, it being like Google. Coming back down, test that gap, but overall finding that it wanted to languish within it. Let's draw a box out here to make this very clear that the gap existed there, which said to the world, hey, look, this company's now trading at this higher price. Forget about those old ones. And then it's come back down and it's spent the day between the two of them. Hesitancy in the markets, but while gold drops in the background and oil is artificially deflated, in a world where we could have new certainty and clarity being delivered to us, if expectations are met, we may find a rise up to test the highs before markets resolve to dump down further, if indeed they are going to. Let's keep an eye out for that, keeping a close attention towards the key cutoff points, which are actually going to be, well, actually, you're going to have to join the Discord and ask me, send me a message at Rocky Outcrop, and we can talk about the key risk management areas. My Discord link is in the description below, but if you just want to type this into your URL browser right now, this URL, https://discord.gg/Rocky Outcrop, all one word, you will get a free instant invite to a community of traders who'll be talking about these topics, because it's what we do. Thanks very much for tuning in. My name's Rocky Outcrop. I'll see you all again next time.